particularly in this environment where you have, you know, potential macroeconomic weakness because of a slowing economy. You want these business models that will be intact, that aren't really hypersensitive to shifts in demand and you know the strength of the consumer. And you know those are the kind of companies we have in the American Resilience portfolio, but also the type of companies we have really across the three strategies. And you know, if you have kind of resilient earning streams and declining interest rates, that's a pretty good long-term recipe for improving valuations.
What do you think the biggest hindrance is to the AI revolution? I mean, what could get in the way in your view of all this? I know what I think. I'll just blurt it out. I think there's a danger of like too much regulation. Obviously, you know, I'm not saying it's the Wild West. You do need oversight, but you know, I do worry that you know, government involvement just might do. You know, I don't think it's going to happen because I think that actually these investors are so much further ahead of where the government could ever be, that, you know, and that's part of what has been such an engine of, you know, innovation is what has powered the U.S. economy now for so many years. But what's your view? I mean, other than, you know, war with China, which all bets are off the table at that point.
Yeah. Thanks for reminding me about that one. Yeah, I mean, you know, with all of NVIDIA's products.
That's why we like gold.
Manufactured in Taiwan, that would be very extremely disruptive to you know, the AI rollout. Obviously, government heavy hand of government regulation interference would be a problem. You know, I think from on the market side, I mean, there's this ongoing debate. You know, are the applications there? Are they overbuilding the capacity? So maybe there's this, you know, period, and a lot of people are talking about like maybe we're going to face a period of digestion where, okay, guys, you got a little ahead of yourselves. You bought all the GPUs, you built out all the data centers. And
do you think that's what we're seeing right now? Like when you look at the market, it was in part, I guess, I mean, the market's so wild these days and counterintuitive that you would have seen the 142,000 jobs being added and said, woo, you know, the Fed's definitely game on. And therefore you'd want to be partaking in the upside that one would expect the market would eventually see, that windfall as a result of lower interest rates. But you know, people are we saw this last month too, where people suddenly like scaled back.
Yeah. I don't think there's any signs in the market that the AI investment boom is slowing down. I think there's signs that other parts of the economy are slowing down. And that was even, you know, I think in like the Broadcom earnings results this week, you know, that like their other businesses are the ones that are sort of suffering. And so like that's sort of a theme, right? Because the AI is still going full steam ahead, but you know, the rest of the economy is kind of struggling under the weight of super high interest rates. You know, we certainly see that in the housing sector, you know, where mortgage rates have been so high, and that's hurting demand. And in general, you know, the consumers being squeezed. So I think it's like a bit of a bifurcated economy at this point. You've got tech, you know, kind of continuing to have strength and momentum in terms of the underlying economy, not the stocks necessarily, you know, via investment in AI, but then sort of maybe kind of like the late 90s, the old economy, you know, struggling under restrictive monetary policy, which is now changing.
Yeah. I mean, they're about to get more liberal in that sense. And I think there's some frustration. Let me see if I have the sound for you, because I got a kick out of it. Jared Bernstein. I don't mean to pick on Jared. I've known him for years. He used to come on my CNBC show a lot, also on my Bloomberg show, but we could always count on like a really good like powwow with Jared. Like you'd put like Jared on and Steve Moore or somebody, and it was always very entertaining from a viewer's perspective. So Jared's like very, very left. He's a former music major. Nothing against them, right? I studied music. Anyway, he went to Manhattan School of Music. And then he went to Columbia, where he studied to become a social worker. So he went on MSNBC today. And this is interesting, Rob, because he's doing an interview with the wife of the former Fed chair, which is just a little inside baseball if not everybody knows that. So Andrea Mitchell's married to Alan Greenspan, and she gave him an out. Like, it's a bad jobs report. You only created 142,000. Like, what do you think? Is it the Fed's fault? And he didn't take it. I think it is in part the Fed's fault. Anyway, here we go.
Is this cooling off worrying? Is it possible that the Fed went too long in keeping rates high?
Look, I think 142,000 jobs that we got in August, that's demonstrably strong enough to keep the unemployment rate from going up. And in fact, the unemployment rate ticked down from 4.3 to 4.2. No question, that's a slower pace of job gains than we saw, but we were sustaining a breakneck pace that we knew was going to slow down. I think the operative question here, Andrea, is are we generating enough jobs to give people ample opportunities in the labor market to keep the unemployment rate from going up and to especially maintain those solid wage gains that you just mentioned, with wages up about 4% on a year-over-year basis. That's well ahead of inflation, which was last seen at below 3.
Okay. We're going to have to listen to that. But, just for what it's worth, I will show people this graphic because well, I don't need to show you a graphic. I'll just tell you. Wages are actually vis-a-vis where we were like 3.5 years ago, down some 3.9% real wages versus where they were in comparison, which was up better than 8%. So, look, it's spin, but I just got a kick out of it because, maybe Alan has been telling her at home, for God's sakes, when is Jerome going to move? Like, when is he going to move? So she gave Jared the out. She's like, it's the Fed's fault. But he didn't, he just, sugarcoated it. It's everything's great. No worries.
Yeah, at least he didn't start explaining MMT again.
Okay, inside baseball. For those of you in the know that watch this channel a lot, Rob and I did a whole thing on that because he kind of got himself in a little bit of a hole when he was trying to explain how the Federal Reserve and money printing and interest rates all worked. So that's what Rob's referring to.
Yeah, it's sort of a walk down memory lane there.
Yeah.
But I think it's important to realize, the purpose of this restrictive monetary policy has been to slow down the economy. And you do that by, kind of making the employment picture not as strong by, in fact, putting downward pressure on wages. Wages can drive up inflationary pressure, rising wages, the wage price cycle, right? Mm-hmm. So, this is sort of what the Fed always intended to do. And now it's coming to pass. And the question is, are we going to have a soft landing or a hard landing?
Well, we'll see.
It is the Fed.
This is why, maybe it's time to put a little innovation in. We need this innovation right about now, which gets us back to sort of the interesting things that Donald Trump was talking about, the sovereign wealth fund, tariffs, using trade and tariffs in an innovative way. But, look, I'll just say this, and it's been my experience. We do a lot of things really stupidly. We don't have the best talent at the Treasury Department. Sorry, but a lot of people that want to go and work in government, like they want to be in the sort of West Wing, right? Or they want to be in the State Department. And for whatever reason, we're not getting the best and the brightest at the Treasury Department. And that's a concern because I think you really need to be smarter in terms of, Treasury and also working with state to think articulately about how you're really going to influence international policy. I'll leave that for a minute just to get back to some of the comments and suggestions. Peace of Mind asking sort of about the AI applications, like, are we going to see a lot by way of applications? And I would just say, Peace of Mind, that's an interesting question. And my frustration when I went and tried on those little Apple goggles was that there was really no way to do anything with them. Like, you can't, you can buy them. They're like a fortune. They're $3,500. That'll come down too, by the way, in time. But I would just say that there's so much opportunity that is going to be coming our way. And it's exciting to think about, but we're not there yet. When I saw what they were offering, for example, on Apple, it was very little. So you wouldn't buy that now. There's no reason to.
Yep. It's definitely like a little bit early days in terms of the applications. But I think investors should really look for companies that are well positioned. I think a lot of software companies, we own one in the American Resilience portfolio that we talked a little bit about in the most recent monthly report, where they are rolling out AI technologies and AI. So they're not the AI. They're not a hyperscaler, but they're kind of taking advantage of AI to better serve their customers, to get, forge deeper relationships with their customers and become stickier and grow their kind of revenue opportunity. So, I think it's early because that capacity is getting built out, but people should look for, companies that really have genuine opportunities to take advantage of the technology for the benefit of their customers.
Yeah. All right. Well, look, it's pretty wild this point in time. I would encourage everybody. We have 76 Research there. You can get this for just the 76 report you can get for just $1 a month. It's code word dollar, DOLLAR. We'll give you that. And you can go to the website and get this research. It's just $1 a month to start. I should make clear, for the first 2 months, and then it goes to $9.95. But this is good. I mean, I think hopefully like you'll come away with a lot of ideas. And we put a lot of care and effort into what we're thinking about in terms of what the opportunities are right now. Or you can sign up for one of the model portfolios, or you can get it all, like just the whole shebang, if you get the Founders Club there at 76 Research.